Hey Trailblazers, it's Michelle here. Did you guys get your PPP loan? Well, congratulations. Today I'm going to show you how to record your PPP or the Paycheck Protection Program loan in Xero. For those that don't know me, I'm Michelle Edwards. I'm a CPA and owner of Trailhead Accounting Solutions. Thank you so much for joining us. All right, so depends on your bank. Some banks are requiring their customers to set up a new bank account to hold the PPP loan and to help keep track of it. If you set that up, I will show you how to do that. If you did not set up a new bank account, no worries, you can just skip this step. So we're going to come up here in accounting, and today I'm just working in Xero's demo company. You're going to come down here to chart of accounts. All right, and what the second option is called Add Bank Account. So if you did set up a new bank account for your PPP, this is where you'll do that. So you click on Add Bank Account, and you can type in your bank. We're going to pretend like we use Chase Bank. Oh, I picked the credit card one, I'm sorry. And then the account name, we're going to call it the PPP Checking account. You can add the account number. If you want, this is going to want to tie it to it. You don't have to log in to connect them. If you want to connect them today, we're not going to connect. I'm hoping it will just let me go without. Perfect. All right, so you can see that now it shows up on our listing of accounts. Now we've got our PPP checking account right here. All right, now for everybody else, we're going to need to add a liability account because we just took on a loan, right? So we're going to click here, add a loan. I'm going to see what our loans are in here. They start with a 2. Okay. So account type, we're going to pick a liability. It's going to be a non-current liability. The code, we're going to call it 280. And the name, we're going to call it PPP Loan. And we'll hit save. All right, so we added our PPP checking account listed right here. And then if we scroll down here to our liability section, you can see we have our PPP loan right here. All right, so let's dive over to the dashboard and let's say that the money came in. So you can see on our dashboard, Xero already added it, so we can see it here. We're going to receive money. If the money just came into your regular checking account, just pick your checking account. That's not a problem. All right, so we're going to say the money came from Chase Bank. Created that as a new contact. Let's say the money came in on Monday. And we're going to give it a reference, PPP loan. I always like adding reference and details. You never know when you need to go back and look at your accounting records, especially if it's like 2 years in the future, 5 years in the future. I always find that having a description makes it a little bit easier to know what I was doing and what it was for. And let's pretend like we got $100,000 from the loan, and we're going to select the account's going to go to PPP loan. Then we're going to deposit this into our PPP checking. We'll hit save. Perfect. So now you can see we've got that transaction recorded as a transaction here. And then on our dashboard, we have $100,000 in our PPP checking account. So let's look real quick at your financial statements just so you understand what's going on. See if it'll kind of give you a bigger picture of how this is getting recorded on your numbers. And I apologize, the internet is really slow this afternoon. I think it's all these kids doing online schooling and all our neighbors working from home, so it's a little bit slower than normal, so I apologize. All right, so we want to look at our balance sheet, and we're going to pull it for we want to look at it through the end of April. We don't want to compare it to anything. All right, so you can see we have our checking accounts, and since this is a sample company, there's not much other data in here. So we just have our PPP checking, but a normal company would have, other bank accounts, obviously. So we've got our new PPP checking that we set up. It's showing $100,000. Then we're going to scroll down to the liabilities. The liabilities is basically a fancy word of money that you owe somebody else. And your business owes Chase Bank $100,000 unless that loan is forgiven, right? And we're not going to go into the specifics. I'm assuming if you got the loan, you've read your loan documents, you know the specifics of this loan and what you need to do to make it forgivable. But a quick recap, it is designed for payroll. So if you spend the money on payroll, you can apply state and local payroll taxes towards forgiveness. Any benefits you pay for your employees, such as health insurance or retirement matching, mortgage interest, if your business owns the building that you're in and you're paying a mortgage on that building, so you can use your mortgage interest. Otherwise, if you're paying rent, you can include your rent and any utilities for that office space or that warehouse space, wherever you guys are renting or own. All right, so jumping back. So that's how this is reporting on your balance sheet. There's not going to be anything on your profit and loss yet or your income statement because you don't have any income or expenses, right? Right now it's just a loan. All right, so then let's go back to the dashboard and let's say we start spending the money. So we got the money on Monday, our 8-week clock starts, so we need to start spending. So we're going to come in here and we're going to start spending this money. I'm going to use the PPP checking account. Makes it easier for you guys to see what I'm doing. Again, if you're running this through your main checking account, don't worry about it. You can pick that. So let's say we have our rent that goes out. So Willow Properties, and we're going to pay rent on May 1st. And let's say our rent is $2,500 a month. We're going to pick rent expense, saving out another. Okay. And let's say we have utilities. I don't know if any utilities will come up in here. I should have looked before I started. Let's just put in Utility Co. is our utility company. Say we paid them on May 15th. Say our utilities are $125 a month. And it's going to go to, where'd you go? Utilities expense. All right, and then let's say we have our payroll. So go ahead and enter payroll because that is the main reason that we're using this for. So we had payroll on May 15th. So we're going to record our wages expense. Let's say payroll is for $40,000. We're going to record our payroll taxes. Let's say the business has payroll taxes at $4,000. Payroll tax expense. And our employees tax withholding. So less the employees paid, let's say $5,500 in payroll taxes. Okay, so there's our payroll entry for May. All right, so let's go and jump over and see what's going on here. I guess we can back up. So as we're recording these expenses, there's a lot of talk on the different accountants trying to figure out how the best way to handle accounting for this in the software. Some people think we should use tracking. I am going to advise against that, and this is why. So if you're going to use the tracking is a great feature if you have, multiple departments in your business or multiple locations in your business. So let's say locations. Let's say you have an office in Denver, Boulder, and Golden. And if you want to track the income and expenses by each of these locations, the tracking is an awesome tool for that, right? So you can run your profit and loss and your balance sheet as your business as a whole, but then you can also run it by each department or each location. So you can see how profitable your Golden location is compared to your Denver location. You can see, if your Golden location sells more of one product versus your Boulder location. So it's a great tool. The problem is if you start using tracking to track your PPP loan, now all of a sudden you can't track these expenses to which office they belong to, because now you have to track it to PPP. So for the very short term, this quick 8-week period where we can apply for loan forgiveness, yes, it makes it super simple to pull all of these transactions out of Xero really quick and have a report to be able to go gather those documents. But on the flip side, it messes up your financial tracking. You are running a business. Business is normal. I know it doesn't feel normal right now. There's a lot going on and there's a lot of uncertainty. But as we get through this, and next year and future years, you're going to want to look at these reports and compare year after year how your business did. How much did you spend in payroll? How much did you spend in rent? And when you look and compare, and you're missing some of these costs because you tagged them to PPP, it's going to make 2020 look really wonky. 2020 already is going to look wonky, and it's going to even mess up your numbers more. So I don't even recommend tracking it that way. If you do want to track it, create a simple spreadsheet kind of like this where you've got, columns for all the different expenses that you're running through. You can do it by week. You can track, hey, we got this much. This is how much we spent. Here's how much we have left. And as you go through and expense all of these different categories, have a file folder. Either it's a paper folder or one saved to your desktop for electronic files. And as you run payroll, just put those payroll reports right in that folder. As you get your rent statement from your landlord, just save a copy of that right to your PPP folder. Then at the end of the 8 weeks, you have all the documentation you need to turn around and apply for forgiveness. Okay? And then you have this tracker as well if your tax guy needs it at the end of the year. But for purposes of reporting, you don't need to track this. And if you think about it, it's just a loan, right? It's a little bit different because hopefully some of it's going to be forgivable. But any other loan your business takes out, we don't track those expenses to that loan, right? That doesn't make sense. We wouldn't do that because it would mess up our financials. Same thing. We don't want to track these separately from how we would normally track them because it messes up our financial reporting. So I recommend just doing it simply and recording as you would any other time and any other expense for your business. All right, so we've got all of our expenses written out. So now the end of the 8 weeks are done. We apply to the bank and woo, good news, we got $80,000 of our $100,000 loan forgiven. So we are going to need to record that. So we're going to come up here under accounting. And you're going to come down to the bottom to manual journals. And I know a lot of people don't like journal entries, but it's the best way to record this. So we're going to hit new journal. We're going to use this journal entry to record the loan forgiveness. So the narration, the purpose of this is the PPP loan forgiveness. Let's say they forgave the loan on July 15th. Description, same thing, PPP loan forgiveness. Okay, we are going to reduce our loan, right? The bank said, hey, we gave you $100,000, you used $80,000 of it for things that you were supposed to, we're going to forgive that. So we're going to debit the PPP loan by $80,000. Okay, the next line down, we're going to create a new account. It's going to be an income account, and we want it to be other income. Now this is really important. I'm going to say it again. You want it to be other income. The reason for that is this is going to report this income at the bottom of your profit and loss. So when you're looking at how your business performed for the year, you don't want this in there showing that you had extra income, right? Again, when you compare year after year, that's going to make your financials look really wonky. So this is going to put it at the end so you can see truly how your business performed. And then you guys got this nice little loan forgiveness from the bank, from the government to help out with your business during this crazy time. Code, we're just going to make up a code. And we're going to call this PPP loan forgiveness. And then I've seen some people like to do dash non-taxable income. If you put non-taxable income, that's a great way to alert your tax person at the end of the year when you send them their financials. Hey, we got this loan forgiveness. Don't tax me on it. It's not taxable income. Okay, so we've got our PPP loan forgiveness income, non-taxable, and we're going to credit that for $80,000. All right, let's save that, and then let's jump over and I'll show you what your financial statements look like so you can see what we're doing, how it looks behind the scenes, and what's going on here. All right, so we're going to click on accounting. We're going to come down here to balance sheet. Slow internet. All right, so we're going to pull this through July. We pulled up our balance sheet for July 30th. And you can see we have our PPP checking. It started with $100,000. Over that 8-week period, we made some expenses, right? If this is a true business, we only recorded a handful of expenses for the month of May, but remember you had 8 weeks, so with this we would have had more expenses in here. I would expect this account to be closer to $20,000 since you guys had the $80,000 forgiven, but that's what we've recorded so far. And then we're going to scroll down to the liabilities, and you can see our PPP loan right here. And it started with $100,000 in it. We had $80,000 forgiven. So now it's showing that we owe $20,000 to the bank. Okay, and then let's jump over and look at our income statement, and you can see the same thing. All right, while we're waiting for this, if you guys are learning something new, give us a like, give us a thumbs up. If you'd like to see more videos on Xero, go ahead and subscribe to our channel as well. All right, so we have our income statement for this fiscal year. And you can see we have our wages that we expense through, right? We have our rent that we ran through. And also utilities that we expensed, right? And then this is, other stuff going on in this business. And then at the end of the day, we're going to scroll all the way to the bottom and you can see other income. Here's our PPP loan forgiveness, non-taxable income of $80,000. So again, the great thing about doing this as other income is you can look up above and you can see, hey, our business year to date made $25,000 in income, right? We had some expenses. So far, our business is operating at negative $62,000. So it's been a really rough year for this business, right? They've probably really been impacted by what's going on with this virus. Then we got our loan forgiven. So we've got $80,000 of income for our loan forgiveness, which brought our net income to $17,000. So the great thing about putting this down below is you can really see how your business is operating. Because at $17,000, you're like, man, we've had a pretty good year. No, you haven't, because this $80,000 isn't. This is a one-time payment from the government, right? This isn't a normal income for your business. So that's the good thing about having it at the bottom, is you can really see how your business truly is performing before you got the loan forgiveness. All right, one last thing I want to show you. So now that the loan has been forgiven, you have to start making payments back to your bank. If you are a larger company, you're going to want to go ahead and get that amortization schedule from your bank, or go ahead and create one, and you're going to want to put an interest payable on your balance sheet. If you're a small business and third parties aren't looking at your financials, you don't really need to worry about that. I'm going to show you the simpler way to do this. So we're going to come under here, we're going to spend money. I'm going to say we still have money in this PPP checking account, so we'll spend it out of here. There's two thought processes on this loan too. You know, at the end of it, if you had the money in a separate account and you haven't spent it, if it doesn't get forgiven, I know a lot of business owners plan to just turn around and pay it right back. They don't want the loan. They don't want to pay interest. They're going to turn around and pay it right back. And that is totally an option. If you decide, you know, we're struggling and that $20,000 really is going to be helpful for our business, then you can go ahead and keep it and use it as a loan to cover, you know, future payrolls and whatnot. So we're going to write a check to Chase, and we'll do it on August 1st. And PPP loan payment. Let's say we pay $1,500 a month back on this loan. Not $15,000, $1,500. So this is our principal payment. So we're going to post the principal against the loan, and then you're going to have an interest payment. And let's say the interest is $250 this month. You've got interest expense, and you'll hit save. All right, one last time, let's go look at that balance sheet to see how this impacted your PPP loan on that balance sheet, and then we'll just be about done. So you recorded the expense. We're going to look at your balance sheet. So accounting, balance sheet. We're going to run this through a custom date. We're running it through August this month, or this time, because we made our payment in August. Click update. And you can see we still have our PPP checking account. It's going down every time we run expenses out of here. And then our PPP loan started at $100,000. We got $80,000 reduced, so then this number was $20,000. Now we made our first payment of $1,500, so now it's down to $18,500 is the balance due. So I hope that helps you understand how to account for your PPP. I hope this money helps your business. I also hope that you understand that there's going to be a lot of businesses that owe money back at the end. It's going to be hard for some businesses to spend that full amount on their business, especially if you don't have rent and utilities and a bunch of some of those other big expenses. So just note that and be aware that you did sign up for a loan. So if you didn't spend all of this on payroll, you're going to have a loan to pay back. But I hope the funds help your business, and I hope you guys all get through this crazy time. I hope you're finding some new income streams and some creative ways to serve your customers. And yeah, thanks so much for joining us. Again, if you liked the video, if you learned something new, give us a thumbs up. If you want more information from us, click the subscribe. We try to post videos regularly talking about Xero and doing some tutorials to help you with your business. Have a great day. Thanks. Bye-bye.